Hey everybody, this is DayTraderRockStar, and this is a market radar going into Tuesday, December 15th. I believe, yep, December 15th, Tuesday, another day closer to the Fed meeting where we have a potential rate hike. Interesting day today, but I did a market radar over the weekend. We talked about the bigger patterns playing out, and underneath us, this 1, 2, 3 pattern, a very important level. We had the 60-minute time frame and the daily setup. We were looking for a rally early in the week. It happened to come at the end of the day or towards the end of the day. It is fine with me. This was perfect. This was a perfect day. Here's your 1 minute chart. Let's actually, I want to get to, why don't I have a 5 minute here? There we go. We take a look at the how we came down today, and we came down to that lower trend line, that wedge line. We got through it just a little, but what happened here at this point, and we could see it more in the futures, is we had a nice divergence. It was really a key setup. The market played out really well today. I mean, the hourly, we knew that we're oversold yesterday. The candlestick here was a big part of that. So we had what we had called as an HPS setup based on multiple indicators. Our indicators are our time frames, the daily 60 setup, the lower channel of a recognizable channel. It's also an HPS setup called a trapdoor trend line, where we have two trend lines intersecting. We look at that top one, but if we actually, whenever we see something underneath it, we always pay attention to the one underneath it also. And in this case, we drop down to it just to kind of trigger this low one. Put in a beautiful reversal candle, and then it was off to the races and closed. It closed in good shape. We closed in pretty good shape. We were up 9 points on the S&P. This was very. I was very happy with everything. How the day ended. Futures are hanging in there. Here's your 5 minute chart. We're going to start off tomorrow on the 5 minute being a little extended, but that 60 minute is still in good shape. We're kind of coiled up. I would put the possibility of one final pullback here to get this real coiled up. But you know what? Like we've said on the daily, and I go back to going on to 3 years, this daily stochastic has been spot on. And the last time we got down here, we had a nice reversal. We had a nice candlestick off. We got a lot of selling. The next candle was up, and then we had consolidation. Nice move up until we got overbought. Rotated right back down here. Now what do we see? We see a textbook candle, reversal candle. We had a good candle back here. If we go back on all these, usually we look for that big candle, some type of a reversal candle when we get that oversold level. Big candle. You can see them in each one of these, and this is pretty close to having that a reversal. It's a definite hammer. It would have been great to get a little bit further into the previous candle, but you know what? We'll take it. And the momentum and the indicators are still lined up here for a further move up tomorrow. So it's going to be interesting to see how this Fed meeting is going to play. Are we going to rally before it? Could we have a big rally tomorrow? We also have quadruple witching finishing off the week Friday, so we're going to have all our options expiring straight across the board. So there's a lot of interesting levels. A lot of people talk about strike prices, and you get these option expiration prices. We're right around 2,000. That's a big hold number. So that's a key level that they might be pinning it to. So we might not get far from this 2,000 level. And it's not great if you're holding some calls and you're looking for an aggressive move up. We might actually chop around and get past this Fed thing, and who knows what's going to happen with that. But technically, and that's where we're coming from right now, technically this market is acting fine. We followed this rising wedge pattern. We followed this downward channel, pop up here, the channel, the reversal. Everything is playing textbook. It's really a textbook setup. It's almost... sometimes you look at it and say, too good to be true. You always get nervous at these points. You always get nervous, and you think, well, this is going to be the time it breaks down and all hell breaks loose. Each time you get down there, we get to a point where, we're about to break loose, break down. We're gonna break down, and next thing you know, market turns around, and that's what we have to go with now. To go with what's working.